Good morning, y'all. It's Ferrari here. I just wanted to make a quick video, a very important video on risk management and risk. This is gonna just overlay, our trade positions, like how much you should go into a trade with, um, and for both, like, a day trade and swings per position, and also how many you should have your exposure to your account. So when we do alerts in the room, no one knows what the market's gonna do. I never know. You understand? But if I say a trade or anyone in the room says a trade, for example, I'm liking how SPY's setting up for a short this morning. All right. If that's the trade that I'm going for, you have to, in my mind, have a point where I'm cutting the trade and I'm saying, I'm wrong. I'm out of this trade. I'm down too much on it and I'm cutting it for an account protection. That is a very important rule for your trading account, because through the guidance that's given in this room, we all are responsible for how much bleed we might get on our account. So we have to have a necessary amount at risk. Two ways you could do that when trading options. One is you start in at a good level. For example, if I want to start my short near this upper end of this trend, right? I am going to know the risk defined. So if I'm getting it $1 standard risk or $1.50 standard risk, okay, that right there, depending on my contracts, I already know. For example, those premiums would move maybe 60 cents to $1. So if I have two contracts, I know I'm giving myself $200 of risk. All right. Now, if I'm buying 30 contracts on this move, and say my account's 150K and I'm buying 30 contracts, right there, I'm giving this an $1,800 of risk. All right. You have a larger account. That has to be accepted. You have to know the math. This is a game of math. You have to know and you have to accept it, because the number one thing we don't want is account damage. You don't want, I don't want, no one wants that in this room, account damage, all right? So you have to know your exposure, okay, based on your account side. If you have a $10,000 account, you shouldn't be having $7,000 at risk in one trade. You understand? So that's the first thing. That's for like day trading. The next thing is our swing positions. When we alert a swing position, for example, WD was in a swing position, right? It was alerted. So when we get alert on a swing position, you have to, now these have more time to work. The options that you buy has to be an acceptable risk for your account. All right. So if my account is 10 grand and I get alerted on this WBA trade, and I have to agree with the trade, not agree with just the alert. I have to agree with the trade. And the reason why is because it's my money being put at stake. So I have to be in agreement with the trade, and I have to look at the trade. So when I get alerted for this, I need to say that, all right, 2 weeks out, I myself like this trade. I agree with this WBA trade. I like it so much, my account is $10,000. I'm going to put $800 in it, because I really like this trade. And I'm putting 800 because though I really like this trade, nobody knows what will happen or when it will happen, right? In the market. So we're putting money into a setup. So how much do I like this setup? $800. Great. Okay. Now I buy $800 worth of option contracts and I set my trade and I forget it. And I'm confident because I picked this trade. All right. Larger scale. You have $150,000 account. Wow, I like this trade. I like it so good. I'm gonna put $8,000 into this trade. All right. But it's a choice that you're making. And it's a setup that you agree with. Highly, highly, highly important aspect. All right. And then the last point that I want to touch on is how many to have. That is all based on your risk exposure. Everyone's risk exposure is different. You could put your whole account into different swings if that's your risk exposure, but you have to be aware of it and be able to make that decision. So, and what I'm risk exposure I mean is, hey, $150,000 account, I could put quite a bit of $8,000 trades on if I want to. All right. But if you have 30 positions and they're all in, at $8,000, I mean, you can't even do that with $150,000 account. But the point is, know how many positions and how much risk you have and be okay with that risk. Look at each position that you have for yourself and say, I like this risk and I accept it. And always look at the worst. Don't prepare for it, vibrate it, and worry about it. We don't never give into those, but just look at it and be okay with that exposure. All right.